Have you ever noticed how your money seems to slowly disappear, even though your bank account shows an interest rate? It's a sneaky trick. Inflation is silently eating away at your savings. Every year your groceries cost a little more, your rent creeps up, and that shiny new gadget you bought seems a little less impressive. It's a constant battle against a tide that seems determined to wash away your purchasing power. But what if there were ways to fight back? What if there were strategies to not just keep your head above water, but to actually grow your wealth and build a secure financial future? The truth is, keeping cash in the bank can actually be a losing strategy. Traditional savings accounts might offer a measly interest rate, but inflation often outpaces that, leaving you with less buying power in the long run. But fear not, there are powerful financial tools at your disposal, often referred to as alternative assets, that can help you weather the storm of inflation and even come out ahead. These aren't just for the stock market gurus or the Wall Street elite. In this video, we'll explore 6 powerful asset classes that can be wielded by even small investors to build lasting wealth and achieve financial security. Number 1. God's money, a timeless hedge against inflation. Let's start with something fundamental. Remember when a dollar could buy a lot more? Governments love printing money to stimulate economies, but that makes existing dollars less valuable. It's a bit like watering down a delicious glass of juice. You still have the same amount of liquid, but the flavor gets weaker. This is where the first of our gods of money comes in: precious metals. Precious metals like gold, silver, and platinum are scarce and can't be easily printed into oblivion. They've been valued for millennia for their beauty and utility, and their scarcity makes them a natural hedge against inflation. In fact, an ounce of gold cost around $400 in the 1950s, but today it's over $2,000. According to Prime XBT's gold forecasts, this price is expected to rise to $10,000 by 2032. Imagine this, in about 10 years, your gold investments could be worth 5 times what they are now. While the value of cash diminishes over time, gold continues to appreciate, making it an essential part of any robust investment portfolio. Moreover, if you're hesitant about buying and storing physical gold, you can invest in gold ETFs. Exchange-traded funds are a great option. These are affordable investment vehicles that mirror gold price movements, allowing you to benefit from the appreciation of gold without the hassle of physical storage or security concerns. Number 2. Industrial commodities. The building blocks of a growing world. The world needs raw materials to keep things running. We turn to industrial commodities, which are raw materials with intrinsic value due to their utility in various industries. These commodities are indispensable for modern technology and infrastructure. For instance, silver is used in electronics, medical equipment, and nuclear reactors. Other metals like cobalt, nickel, and copper are in high demand due to their unique properties that cannot easily be replicated by alternative materials. To illustrate, the demand for cobalt has skyrocketed since 2020, primarily because it is crucial in manufacturing batteries for electric vehicles. Correspondingly, its prices have surged from $20,000 per ton in 2012 to $40,000 in 2022, a 100% increase in just a decade. Investing in such raw materials can significantly boost your portfolio, especially during high-demand phases. However, investing directly in these materials can be challenging due to the high costs, storage issues, and finding the right buyers. A practical alternative is to invest in stocks of mining companies, mining-focused mutual funds. Another approach is to invest in commodity ETFs, which track the price movements of a basket of commodities. This allows you to gain exposure to a diversified range of industrial materials without having to pick individual winners. Number 3. Safe haven currencies. Finding stability in a chaotic world. Not all currencies are created equal. Some countries like Switzerland have a reputation for political and economic stability. In a world dominated by fiat currencies, geopolitical stability becomes a crucial factor for safeguarding your investments. This is where safe haven currencies, like the Swiss franc, come into play. The Swiss franc is renowned for its stability, especially during times of global turmoil. Switzerland's robust economic system and political neutrality make the Swiss franc a safe store of value. Historically, during crises such as the Eurozone debt crisis in 2009 and the global financial crisis in 2008, significant funds flowed into Switzerland, protecting wealth from currency depreciation. More recently, during the Russia-Ukraine crisis, the demand for the Swiss franc soared as it became an alternative to the US dollar for international trade. This led to a tremendous appreciation of the Swiss franc, with its value against the US dollar rising significantly. While you might not be able to open a Swiss bank account, those days might be behind us. You can still benefit from the stability of safe haven currencies. Currency ETFs allow you to invest in these currencies with as little as $100. This means even small investors can add a layer of stability to their portfolio and potentially benefit from rising exchange rates. Number 4. Sovereign guarantees. Backing your investment with the might of a nation, government securities. Ever wonder what makes the dollar valuable? It's backed by the full faith and credit of the US government. Or have you ever noticed the phrase, "This note is legal tender for all debts, public and private," on a dollar bill? This phrase signifies the sovereign guarantee provided by the government. Since President Nixon abolished the gold standard in 1971, the US dollar has been backed by the full faith and credit of the US government rather than gold. This makes it a valuable medium of exchange. Investing in sovereign guarantees through government securities offers a stable and reliable store of value. Government securities, or G-SECs, are backed by the issuing country's government, making them one of the safest investment options. Governments are typically the last to default, and a strong government's securities provide a secure return on investment. For example, in the US Treasury bills, notes, and bonds, also known as treasuries, offer better returns than keeping money in the bank. These are backed by the strength of the US economy. Small investors can purchase these securities directly from the government through the Treasury Direct portal or from the secondary market. These are especially secure because the entire US government stands behind them, making them a very low-risk investment. Number 5. Value stocks and mutual funds. While government securities offer stability, they often come with lower returns compared to stocks. For investors seeking higher returns, value stocks and mutual funds are excellent options. The stock market is broadly divided into growth stocks and value stocks. Growth stocks, like those in the tech sector, are riskier but have high growth potential. On the other hand, value stocks are less risky and offer steady returns due to established demand. Value stocks with strong fundamentals provide stable price appreciation and regular dividends. However, researching individual value stocks can be time-consuming. Dividend-focused mutual funds, like the Vanguard High Dividend Yield Index Fund Admiral Shares, offer an efficient and affordable way for investors to benefit from a diversified portfolio of high-dividend stocks. Number 6. Land and real estate. Land and real estate have always been among the most valuable assets throughout human history. Land is a non-depreciable asset, meaning its value doesn't diminish over time. The demand for land and real estate will always be high due to the growing human population and the need for homes, schools, factories, and commercial spaces. According to a Bloomberg study, housing prices have tripled between 1992 and 2020, despite a significant dip during the 2008 housing bubble. Real estate acts as an excellent inflation hedge, preserving and increasing its value even when the dollar loses its purchasing power. Many small investors delay investing in real estate, thinking they need substantial capital. However, real estate investment trusts, REITs, offer a practical solution. REITs are similar to mutual funds, but focus on real estate. For instance, Ventus Inc., VTR, invests in healthcare real estate, including senior housing, research facilities, and hospitals. Alternatively, investing in rental properties allows you to earn rental income, which can cover expenses and mortgage payments while generating profit. Lastly, we have collectibles, which include vintage cars, rare art pieces, handcrafted luxury handbags, limited edition watches, and first editions of iconic books. Unlike regular items that depreciate over time, collectibles often appreciate in value. For example, Leonardo da Vinci's painting, Salvator Mundi, was purchased for $450 million at a Christie's auction in 2017. Similarly, a 1955 Mercedes-Benz 300 SLR 𝐬𝐮𝐩𝐿 Coupe sold for an astonishing €135 million in 2022, making it one of the most expensive cars ever sold. The rich invest in these unique items because they are timeless repositories of value. However, investing in high-end collectibles can be out of reach for average investors. Online marketplaces like Whatnot allow you to buy and sell rare baseball cards, comic books, and action figures. Platforms like Rally and Masterworks offer fractional ownership in collectibles, making it accessible to a broader range of investors. In conclusion, while banks may not be the best place to grow your wealth, Diversifying your portfolio with these 6 asset classes: precious metals, industrial commodities, safe haven currencies, sovereign guarantees, value stocks and mutual funds, real estate, and collectibles, can protect your wealth from inflation and market volatility. By investing wisely, you can create a financial legacy that lasts for generations. If you like the video, give the thumb up and see you in the next video.